Good morning. Good morning. I know I haven't made a video. I don't even know why I'm saying this for myself in a few days. I did take a trade yesterday, made $100. I didn't post it or record it. And I missed today's trading session, honestly, because I was out on a date last night and CPI looks like it was a wreck. But after I go over the market this morning, I realized it almost seemed obvious. I mean, doesn't mean I would have had it when I was alive, but really want to point out some things this morning because it's the exact type of setup that I love to look for. It's the exact things that I look for every morning, and it's the exact stuff that I've been preaching in all my other videos. Coming into this morning, really probably the best time frame to watch would have been the 15-minute. If you wanted to watch these fair value gaps, you could have used this fair value gap, this fair value gap, or them together, because it did use them. Like body stayed above it, and then here, this uses it to go higher. I want to show a simpler way of showing what happened in the market this morning. When you go to regular trading hours and you look at this, all you really have to do is grab the Fibonacci and go from yesterday's close to today's open. And I say in all my videos that on average, this will be filled between 25% all the way to 100, and it does it precisely. It could do a 25%, it treats it as fair value gap with quadrants. It could have filled at 25% went bullish, 50% and go bullish, or, 75 to 100%. Basically, if it respects a level of the regular trading hours, new day opening gap, and then gives you a confluence on top of that, it's a really good trade. If you have a bullish bias and you just need half of the regular trading hours, new day opening gap filled, what you'd be looking for is an inverse fair value gap. Or if market opens and hasn't filled the gap at all, then you're going to be looking for a short into the gap. And as you can see here on the 5-minute, here's the 50% mark, or the consequent encouragement of the regular trading hours, new day opening gap. And look at the candle bodies. Look at the candle bodies just cutting it like a knife, staying above that consequent encouragement. Along with it using the quadrant levels, touches the top, goes back down, goes up there. This is the previous week first fair value gap. If you don't know ICT's weekly and daily first fair value gap, don't even get me started. I feel like it's massive. This is this week's first fair value gap, and look what it touched this morning. This is last week's first fair value gap, and look it on the 5-minute, and it does that precisely on the 1-minute as well. It barely draws outside the lines. Go down to the 1-minute. Oh, I went into 1 month. Actually, I do want to point one more thing out on the 5. I'm working off my lap this morning, and I do not have a mouse because I'm not home. I'm working on a keypad here, and it's slower. You go from the opening high to the low it made on the 5-minute, and then you go with the retracement, OTE retracement. Look at how it gets respected. It's how the candle bodies are staying below 79, not closing above it, right? You get an OTE retracement, and then you drop down to the 1-minute. The daily first fair value gap gets made right here at 937. No fair value gaps made, no fair value gaps, 937 daily first fair value gap. 943 first 15-minute candle has not closed. You can't even think about taking this trade. Anyone who took this short, just not very smart. That's probably why a lot of people don't like the first fair value gap, because it does this type of chop through it. But stays up here in this consolidation, closes below the first fair value gap at 1002. What's 1002? Right in the middle of the freaking macro. Tap, tap, right there. That right there. If you wanted to like short it into partial of the new day opening gap, easily could have pulled a 1 to 2. That was the first trade that I noticed. But I think the better one, since I like late macro entries and I do not like entering on the hour change, I feel like that, on the hour change from 9:59 to 10, that's it starting to make the wick. As you can tell, it comes down here, makes the wick, and then ends up closing, I'm pretty sure, as a bullish hour, if not, or an indecisive hour. Yeah, if that's the close and that's the open, an indecisive hour. But the better trade, you wait for late macro, and if you watch any of my videos and any of my strategy, 1020 is the time the market decides the direction it wants to go. It doesn't mean the 1020 candle's pointing in that direction. It means 1020 is when it's going to start moving, like actually moving, not consolidation. It's going to move where that hour wants to close. We come down here, we hit 50% of the regular trading hours new day opening gap. And remember, on the 5-minute, it respects this line. Comes down into the weekly first fair value gap, draws a little bit outside the lines, right? Closes, inverses this fair value gap. At what time? 10:20. 10 mother effing 20. It inverses this fair value gap after respecting 50% of the new day opening gap, or regular trading hours new day opening gap, and it closes above the weekly first fair value gap. And if you know anything about the weekly first fair value gap, it's always got a lot of volatility. It always going to throw something somewhere. It could have closed down here and hit it and then ran, close up here, hit it again and ran. But look, it didn't even have the cojones to touch it a second time. And look how this inverse fair value gap right here, well, this bearish fair value gap that turns bullish, look at the consequent encouragement of the fair value gap is the same as the regular trading hours new day opening gap. Tell me that's coincidence. Tell me that's coincidence. It's not. This market moves in such precision. But anyways, at 1021, where I think you could have got the best entry of the day, 1021, bam. Place your stops. Right below the candle body. Right below the weekly or first fair value gap. Weekly first fair value gap. Probably could have even done a little higher, but just extra safe because I would have probably thought it could have came down and hit this, maybe wicked through this into this, but hopefully not closed below this. And look at that. Just putting the tool on, there's already a 1 to 2, and you would have been out in what, 5 minutes? 5 minutes at a 1 to 2. And if you could have held it, another like 21 to 1034. Yeah, 12 minutes to get a 1 to 3. 12 minutes, 13 minutes, whatever the hell it is, to get a 1 to 3. That's spectacular. And that to me is just the kind of precision that this market moves in. Personally, I probably would have, I don't ask for more than 1 to 2, and I wouldn't, especially Evan, ask for more than 1 to 2 here because the daily first fair value gap sitting right there. And I wouldn't have wanted to take profit above that daily first fair value gap. Like, it did push through it fast, but look at how it uses it. Look how much it uses this one fair value. It closes below it. Bam, bam. It's in it. It's thing. But this is what I love to see, especially since this is a big part of my setup as using the regular trading hours new day opening gap and the daily first fair value gap to enter my trades, and have the 5-minute respect this, the first weekly first fair value gap here, an inverse fair value gap with the same consequent encouragement. This could have just would have been a beautiful trade. 641 to 725, close to 100 handles. Anyways, thanks for watching.